270 billion. Gone. In a single trading day. Not because of a war, not because of a crash in oil prices, not because of some economic disaster nobody predicted. Because of one machine built by a company almost nobody outside the chip industry had heard of before this week. Samsung had its worst single day in nearly 20 years. SK Hynix, a company that just completed the second largest stock market debut in American history, fell below its own IPO price within weeks of going public. And ASML, a company so dominant it hasn't had a real competitor in over 2 decades, watched investors erase $44 billion of its value in a single session. Here's exactly what that machine is, how one report caused this much financial destruction in under 48 hours, and why this might be the moment the chip industry looks back on as the real turning point of 2026. If you want to actually understand what happened here instead of just watching the scary headlines scroll by, hit subscribe right now, because I'm about to walk you through this piece by piece, and it's more interesting than any headline captured. Here's the headline version, and there are actually 2 separate shocks stacked on top of each other here, which is exactly why the damage was so severe. Shock number 1. On July 27, 2026, Changshin Memory Technologies, CXMT, China's largest DRAM producer, made its stock market debut on Shanghai's Star Market. It priced shares at roughly $1.28. By the end of the first day of trading, shares had surged 466%, closing near $7.24. That single-day pop gave CXMT a market capitalization of roughly $487 billion, briefly making it the most valuable company listed on any mainland Chinese exchange, bigger than the Industrial and Commercial Bank of China, one of the largest banks on Earth. Investors in Seoul watched that happen and immediately started asking an uncomfortable question. If the market is pricing a Chinese memory chip maker that highly, what does that say about how much cheaper Chinese memory is about to get? Then came shock number 2, the very next day. On July 28th, a report confirmed that a Chinese firm had begun mass-producing domestic immersion DUV lithography machines, the specialized equipment used to print circuit patterns onto silicon wafers, and had already started delivering them to Chinese chipmakers SMIC and CXMT. Within hours, South Korea's Kospi index collapsed nearly 11%, triggering an emergency circuit breaker. Samsung Electronics closed between 13.4% and 13.6% lower, its single worst trading day in almost 20 years. SK Hynix dropped between 14.5% and 14.7%, with its newly listed U.S. shares falling below their own IPO price. Combined, Samsung and SK Hynix lost approximately $270 billion in market value in that one session alone. ASML, the company whose 20-year monopoly this news directly threatened, had already dropped more than 6% the day the report first broke, and continued falling toward a 7% loss as the story spread, wiping out roughly $44 billion of its own value in the process. To understand why a piece of factory equipment can crash markets on this scale, you need to understand exactly how absolute ASML's grip on this technology has been for the last 2 decades. And exactly who just cracked it. Every advanced chip in the world begins as a blank silicon wafer, completely featureless and useless on its own. To turn that wafer into an actual working chip, manufacturers have to print billions of microscopic circuit patterns onto it, using a process called photolithography. essentially projecting light through an incredibly precise mask to carve patterns thousands of times thinner than a human hair, layer after layer, until a functioning chip emerges. DUV lithography machines are the workhorses that perform this process for the vast majority of chips manufactured globally, including nearly all memory chips. The exact business Samsung and SK Hynix built their entire empire on. For over 20 years, ASML has been essentially the only serious global supplier capable of building these machines at the scale and precision the industry demands. Every major chipmaker on Earth, Samsung, SK Hynix, TSMC, Intel, Micron, and Chinese manufacturers too, has depended on ASML to actually build their products. That dependency became a deliberate geopolitical choke point in recent years, as the United States pressured the Netherlands to restrict ASML's sales of advanced equipment to China, specifically to slow China's chip progress down. Here's what makes this specific breakthrough different from every previous China is catching up story. According to Reuters, the company behind these new machines is a state-owned firm called Shanghai Aiscent Electronic Technology Group, a name almost nobody had heard before this week, which absorbed engineering teams from Yuliangsheng, a lithography startup that had been quietly testing DUV prototypes, and from SMEE, China's longest-running domestic lithography developer. Yuliangsheng itself is an affiliate of SiCarrier, an equipment maker backed by Huawei. So this isn't one lone startup getting lucky. It's the consolidation of multiple Chinese lithography efforts, backed by state resources and Huawei's own semiconductor ambitions, converging into one working production pipeline. The plan, according to reporting, is roughly 5 machines delivered in 2026, scaling to around 20 in 2027. Modest next to ASML's own target of about 130 immersion DUV systems shipped globally in 2026. But modest doesn't mean irrelevant, because these machines are already inside SMIC and CXMT's actual factories, running. But here's the part almost no coverage explained properly. Because 5 or 20 machines against ASML's 130 machine global output shouldn't logically be able to erase 270 billion of value in one afternoon. So what exactly were investors actually pricing in that made this feel so much bigger than the raw numbers suggest? Let's be precise about what genuinely happened here, and what didn't, because both the panic and the dismissal are missing real pieces of this story. Here's what's true, and it matters for keeping perspective. The machines reportedly target 28-nanometer class production, a mature, workhorse manufacturing node, not the cutting edge. That's nowhere close to the most advanced EUV lithography ASML still exclusively controls, the technology needed for flagship AI accelerator chips and top-tier smartphone processors. Reports also indicate China's DUV machines still trail ASML's products in raw performance and build quality, and moving any new lithography tool from early production into reliable, high-volume factory use typically takes months or years of grinding integration work, not weeks. This is not a moment where China suddenly matches ASML's core technology. But here's what genuinely justified the scale of the sell-off. Mature node chips aren't some irrelevant afterthought. Cars, appliances, industrial equipment, power management chips, and large parts of the AI server supply chain all depend on exactly this tier of manufacturing. And for memory chips specifically, the business Samsung and SK Hynix depend on most, this exact tier of DUV equipment is the backbone of their entire manufacturing base. Analysts calculated that ASML's roughly $44 billion single-day value loss was more than 4 times its entire projected annual revenue from China, which tells you plainly that investors weren't just pricing in a handful of 2026 equipment sales. They were pricing in the risk of a sustained permanent crack in ASML's competitive moat inside the Chinese market, a market that still made up about a fifth of ASML's expected 2026 revenue, even after shrinking significantly from a third of full-year 2025 sales. So here's the honest scoreboard. ASML's true crown jewel, EUV technology, remains completely untouched. But the mature node tier underneath it, the tier memory chips actually depend on, just gained a real, functioning, already delivered Chinese alternative for the first time in over 20 years. That's not an existential threat to ASML today. It's a genuine, measurable dent in a monopoly that used to be treated by markets as close to unbreakable. And this all landed at possibly the worst possible moment for Samsung and SK Hynix, because of a second story that had already rattled Seoul just one day earlier, and it's the piece almost nobody outside financial circles connected properly. Here's the layer that explains why this crash hit so much harder than a typical chip industry headline. This wasn't an isolated shock. It landed directly on top of an already nervous market. Just weeks before this crash, SK Hynix had completed a $26.5 billion NASDAQ debut, the second largest stock market listing in American history, behind only SpaceX. That meant when the stock started sliding, the pain wasn't confined to Korean investors anymore. Freshly minted American shareholders who just bought into what looked like an unstoppable AI memory boom were suddenly watching their new position fall below its own IPO price within weeks. Then, the day before the DUV report broke, CXMT's explosive stock debut, surging 466% to briefly become mainland China's most valuable listed company, had already planted a specific fear in investors' minds: that China's DRAM production is scaling up faster and more aggressively than the market had priced in, threatening to flood the memory market with cheaper supply. Layer the DUV lithography report on top of that, and you get a sell-off driven by two distinct, compounding fears hitting at the same time: a financing and valuation concern from CXMT's wild debut, and a genuine competitive threat from China's equipment breakthrough. That combination is exactly why analysts describe this rout as having more staying power than a typical valuation pullback. It wasn't a vague macro worry that fades in a few days. It was two specific, concrete pieces of evidence landing back to back, both pointing the same direction. And zoom out further, because this fits a pattern that's been building across all of 2026. This has been an extraordinary year for memory chip stocks. The Kospi was up more than 90% for the year before this crash hit, almost entirely fueled by explosive AI-driven demand for high-bandwidth memory. Samsung and SK Hynix had been two of the biggest winners of that entire boom. Their valuations weren't just reflecting current earnings, they were pricing in years of assumed dominance in a market most investors had assumed faced limited serious competition. This week, in the space of about 48 hours, two separate pieces of news forced the market to reprice exactly how limited that competition actually is. So where does this actually go from here? Because the response from ASML, from Samsung, and from Washington over the coming months is going to say a lot about whether this was a one-day panic or the start of something bigger. In the near term, expect intense scrutiny on whether Shanghai Aiscent machines actually perform reliably at scale inside SMIC and CXMT's real production lines. Reports currently say China's tools still trail ASML in both performance and build quality, proving that gap has genuinely closed, rather than just proving the machines exist and got delivered. Will take real production data over the coming months, not just headlines. Watch ASML's own numbers closely too. The company has already raised its 2026 net revenue outlook to between roughly $49 and $51 billion, citing very strong order intake tied to AI chip demand, and it still expects about 20% of that revenue from China. If Chinese fabs start substituting domestic DUV machines for a meaningful share of their mature node needs, the China revenue slice, already shrinking from a third of 2025 sales to under a fifth of Q1 2026 sales, could keep eroding further. And watch Samsung's own strategic response, because the company didn't sit still through any of this. The same week this crash unfolded, Samsung unveiled its next-generation HBM4 memory, specifically aimed at tightening its grip on the AI accelerator market, essentially doubling down on the bet that staying at the absolute performance frontier, rather than competing on price against cheaper Chinese memory, is its strongest available defense. If China's equipment breakthrough lets Chinese manufacturers dominate cost-sensitive mainstream memory production, while Samsung and SK Hynix defend the highest performance premium tier, expect the entire global memory industry to keep splitting into two increasingly separate competitive lanes. So let's put this all together, because both the ASML's monopoly is finished panic and the nothing really changed here dismissal are each missing half of what actually happened this week. The panicked version of this story: China just broke ASML's entire monopoly overnight, overstates it. These are 28-nanometer class DUV machines, not EUV. ASML's true technological crown jewel remains untouched, and China's tools still reportedly lag in performance and build quality behind ASML's own products. But the dismissive version: it's just 5 machines against ASML's 130, this is nothing, misses exactly what justified $270 billion in Samsung and SK Hynix losses and $44 billion off ASML in under 48 hours. For years, China's path to domestic lithography independence was treated by most of the industry as a distant, someday problem. This week, a credible report with named delivery targets, backed by consolidated engineering talent and real state investment, collapsed that timeline from eventually maybe into already delivered, already running. Markets don't erase this much value over hypotheticals. They react like this when a risk everyone had priced as far away suddenly turns out to already be standing at the factory door. That's the real story sitting underneath the eye-popping dollar figure in the headline. China didn't destroy ASML's business this week. It proved, with actual delivered hardware rather than just promises, that the mainstream tier of chip-making equipment, the tier Samsung and SK Hynix's entire memory business runs on, no longer requires anyone's permission to build. And the market, watching that unfold right alongside China's largest DRAM maker becoming a $487 billion company overnight, did the only thing markets know how to do with a risk that just got a lot more real. It repriced fast and painfully. Let's bring this together. On July 27, 2026, CXMT's stock market debut surged 466% to a $487 billion valuation, briefly making it mainland China's most valuable listed company. One day later, confirmation that Chinese firm Shanghai Aiscent had begun mass-producing and delivering domestic DUV lithography machines to SMIC and CXMT triggered an 11% collapse in South Korea's Kospi, erasing roughly $270 billion from Samsung and SK Hynix combined, and wiping out another $44 billion from ASML. Together, That's over $300 billion in value erased in under 48 hours, tied to two pieces of very real, very concrete evidence that China's memory chip industry is scaling faster, and now manufacturing more independently than markets had priced in. Let's run through the numbers one more time. $270 billion, what Samsung and SK Hynix lost together in a single session. $44 billion, what ASML lost. 466%. CXMT's first-day stock surge. $487 billion. CXMT's opening day valuation, briefly the largest of any company on mainland China's exchanges. 5 machines this year, 20 next year. The production plan that helped trigger all of it. 20 years. How long ASML held this exact tier of the chip industry essentially uncontested until this week. Individually, these are just numbers about stock prices and factory output. Together they describe the exact moment global markets stopped treating China's chip equipment ambitions as a distant future risk and started pricing them as a present-day reality. If this video actually helped you understand what happened here better than the panicked headlines did, hit subscribe right now, because I'm tracking exactly how ASML, Samsung, and Washington respond to this over the coming weeks. And you don't want to find out after everyone else already knows. Drop a comment with one word. Cracked. If you think this is the real beginning of the end of ASML's monopoly, or overblown, if you think markets panicked too hard over 5 machines. I'm reading every single one of them. Thanks for watching. I'll see you in the next one.